Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, August 21st, 2014. Here's a look at the ES Daily Chart. This is the S&P E-mini Futures Contract, Broad Market Futures. Poked its head up just a little bit once again today, up about 6 points, as was the NASDAQ side, NASDAQ Futures, which is not a big move. We had a very narrow range, only about 8 points total. I'll show you what the intraday action looked like in a minute. That does take us still right on that static trend line. That's the green line there. And new closing high, but just sweeping the actual trading high from back in July. Again, no volume. We're going to look at that as well. It's still the problem parts of August. We'll talk about what that means here in a moment. Here's a look at the NASDAQ NDX. Didn't go anywhere today, as you can see. Basically closed flat. And that one's going to be now 8 bars up. Let's see what that looks like on the daily chart when I go to projection mode here. So 9 bars would give us a startup phase, possibly top us out for a bit here. Here's the SOX trying to get back near highs, also 8 bars up, but has not gotten anywhere near the highs like the other two indices are. Biotechs went nowhere today, actually down 7 points. So you got the NDX flat, the S&P up 4.5 or 5 points. SOX up 5, biotechs down 7. In terms of individual stocks, it was a pretty flat session. We had a real nice, matter of fact, to show you how dead the market is right now. Here's a look at the weekly chart of Apple. This is a 2-year cup formation. And you would think that a breakout to highs, which was going to be $100.72, would have some meaning on Apple at this point in time. Here's Apple in 5-minute bars for the day. We actually swept the 172 level in the second 5-minute bar, so 10 minutes into the market. Caused no volume, no activity. Brand new trading highs on Apple should be a major breakout. Nothing happens. The market goes nowhere. There's no volume in the market or the stock. Then drifts back down. Later on, it did come up and try again. Made a little bit better move. You'll notice it topped out against a 13 sell signal on the 5-minute with the seeker and a risk line there. Also a new 9-bar startup phase right there. And then late in the day, the last 10 minutes or so, actually sold off back under the trigger. That's the type of chart that usually in the market, would have run right out of the gate and probably been up 3 points. No matter where it ends up closing, would have been up 3 points by the close of the session. So let's go and take a look again at volume and see if we can figure out why. And here it is. For the first time this year, not including the day before 4th of July, which was a half day, NASDAQ volume closed under 1.4 billion shares. So even though we've seen the last 8 trading days have been all very light, down near 1.4, with the exception of the options expiration Friday, which reached up to almost 1.7. We had not closed under 1.4 billion shares, and here it is finally closing right under that number. So this is just the lightest volume environment possible. Now, again, I've said this since the beginning of August. When there are no sellers, the sellers go away. August tends to be a positive month. The last 20 years or so, it's averaged a negative return in the markets, but in the last 100 years, it's averaged one of the most positive years. Last year, it was a negative going into the government shutdown and concerns about that. This year, without that on the table, the market is just drifting higher. We're going to take a good look real quick here at the NDX index again, because the problem you can see, and this one shows the gaps, is that most of this move up, and we're basically up about 160 points on the NASDAQ 100 index in the last 10 trading days or so. Most of it has been gaps. We've gapped up and left these gaps behind. And you know the rule, 80% of gaps fill the same day, 95% fill within a week, and we're ignoring that because there just are no sellers. All the professionals are out. There's no position sellers. There's no short sellers dumping into the market. That doesn't bode well for September, which is on average the most negative month of the year. And certainly after August has been positive, that makes it more likely because we're going to see volume start to pick back up when people come back and start trading once we get into September. But in the meantime, smart traders have to be very cautious, very picky, and keep those stops tight. You're not looking to run a bunch of trades in this environment. I ran one futures trade, one Forex trade, and one stock trade for the session, and that was it. And usually that's not how I would trade. But that's all you can do when the volume is this bad. This is as light as it's been all year. And I should also point out the calendar for this year is a little awkward. Usually it's the 2 weeks in the middle of August that are the slowest. And this year, August started on the 1st, Friday the 1st. Obviously, it starts on the 1st every year, but the 1st was a Friday. What that means is that the second week of August was already giving us, it was a full week. We had a full week from the 4th to the 8th, a full week from the 11th to the 15th. And at that point, we were already at options expiration because Friday the 1st, it's the 3rd Friday of the month. So that's the earliest options expiration can be. Usually options expiration would have been, let's say, around the 20th, and you would have had the 2nd and the 3rd week and then end an options expiration. And then you would have had a much after that, a week or two to get back to trading long before Labor Day, which usually is around September 3rd or 4th. This year, however, the second week was options expiration. The third week is right now. These are the 2 weeks everybody's on vacation. This week's been just as bad, if not lighter in volume than last week. And the real trick is next week, which would be the last week of August. It's a full week on the surface, but it leads into a very early Labor Day. Labor Day is Monday, the 1st of September. So that means next week when we close up, not only is Friday end of month, but it's a Friday leading into a 3-day weekend. Unlikely that anybody's going to be around for that. They'll probably head out Thursday. Makes it hard to figure that a lot of the big traders are going to come back and bother trading like Tuesday and Wednesday of next week just to leave again. So it doesn't bode well for this month in general in terms of activity. But again, smart traders, if you end up trading too much and losing money in August, you were warned. This is not the same environment you're used to. We talk about this every year, and certainly this year's got a bad calendar layout. So you should just stay away from the market if you're having trouble making money in it right now. Let's take a look at the this is the ES futures contract and 10-minute bars, so you can see the last couple of days. You can see the gaps. We've just gapped up and left them behind every day. Most of the days have been fairly flat. Today, Wednesday, we didn't gap up. We had a slight gap down, actually, and then drifted higher. But notice that it's just this constant drift. The exception was last Friday for options expiration. We closed flat for the day, which probably would have happened normally. That's after a small gap up, and the only reason we sold off was when Ukraine attacked that Russian convoy, and that ended up getting shaken off, and we ended up closing dead flat, which is options expiration. That's common. But look at the day before it, Thursday, gap up, slow drift. Friday, that was the gap up, and then a couple of big blue bars down when the convoy got bombed. We come into Monday, gap up, very mild drift higher, almost nothing going on. Tuesday, gap up, very mild drift higher. Wednesday, just a tiny gap down. The first hour was painful. The only reason you see the dip today that we just had was because the Fed minutes from the last meeting were released, and that sunk the market, dropped all of 6 points back towards the lows of the session. That right there tells you how many people are out there that small news can make the market cover its entire range for the day back to lows and then just ignore it and turn around and drift back to highs. But like I said, volume did not top 1.4 billion shares. So this is not your normal trading environment, and it's so important. So many people that I train in the markets don't understand the difference, don't ever get that. They're trying just as hard and they lose money in August, and then they think that their trading style is wrong or whatever. It's not about your trading style. It's about the fact that the market doesn't behave the same. It may be about your trading style, but it's about the fact that the market doesn't behave the same in August. And certainly the measurement of that is those volume numbers that we already saw. So that's going to be it. I'll be here Thursday and Friday. Rich will be back on Monday, so we'll have a full team again. But we don't have, I'm just trying to be very honest, as we always are here at Tradesight. We want you to apply your money and your efforts the most when the odds of success are in your favor, and next week doesn't look like it'll have much of a chance of being much better. Once we get past Labor Day, and let me show you this chart again. I showed this to our traders today in the trading lab. Once we get past Labor Day, let's take a look at last year, for example, and you can see, if you look at the August months here, again, volume, the average of volume dropped. Volume got down to a couple days under 1.4, down near 1.2 in a couple of cases for the end of August, of course, the day before Labor Day. And then as soon as Labor Day starts, market starts picking up again. Look at September, not a single day under 1.4 billion. So they do come back in September. It is going to get better. It doesn't happen in one day, but a week or two into September, we should be back to a little more normal volume, and certainly targeting the better part of the trading year, which is late September through April, where we can have a real good time trading in both directions. Looking forward to that. But again, let's make sure that you're focused on the big picture and not this single intraday trading activity when it's just not there. Charts as usual brought to you by eSignal 11. We'll see you in the trading lab to help you make money. Have a good day.